Well, good afternoon, ladies and gentlemen. What an absolute pleasure it is to be here at the Global Fintech Fest. I have to congratulate the organizers, the NPCI, all of the industry stakeholders who are here to put together what has really been a fabulous marquee event, bringing together different voices, different opinions on what it will actually take to make this India's big moment in fintech. And that really is the story that we're here to talk about. It's always a pleasure for me to speak with Mr. Kamath. Mr. Kamath, thank you so much for joining us here this morning. And let's start with that $5 trillion milestone. I don't know how many of you know this, but Mr. Kamath is a big India bull, a perpetual India bull. So let's start with that milestone number, $5 trillion. Mr. Kamath, you think that that's an underestimation of the potential?
Yeah, I think that number needs to be reset, Shereen. When you talk to this August company and considering that they will drive India, I think we need to talk about a 25 trillion number, say 25 trillion in 25 years, or 25 trillion India at 100 after independence.
Okay, that's the first headline, 25 trillion for India at 100. That's the milestone that you hope we are going to be able to touch. But let's talk about the contribution of this sector in specific, Mr. Kamath. And I want to set this into context because a few days ago when we last spoke, you held out a fairly cautionary warning for the banking sector. You gave the banks between 3 to 5 years. You said if the banks do not disrupt themselves, they will largely start to go out of business. And 3 to 5 years is now, it's not somewhere down the future. So let's first talk about the contribution and the role that you believe the banking sector can play in being able to get to that $25 trillion number, and then the fintechs.
Yeah, actually, what I should speak about is the role that the assembled guests here
They're
would
keen
play.
to know what's going to happen to the banking sector as well.
What they would play in that 25 trillion, what number I would believe they legitimately will aspire for in the 25 trillion. And consequent to that, what are the challenges the rest of the financial sector would face if they do not reinvent themselves. So just saying on the headline, my belief is that the digital India will contribute to not less than 25%, between 25 and 30% of this 25 trillion. So you're really looking at a big chunk of growth coming from people who are assembled here, and or they enable this growth to happen, either or. And the challenge and the opportunity for existing fintech financial services players is how to use fintech that is emerging on the horizon or already there to their good. Because if they do not use it appropriately, I think they will face challenges. So again, we can talk about it in detail, but I will just maybe arouse curiosity by saying, if you look at, it has already started. If you look at the broking business, incumbent brokers who have been there for 20, 30 years in digital mode, providing digital services, are under enormous threat from newer players who are virtually digital only. So it's the start of a process of change, which will slowly, I think, pervade. So I hope 5 years that I caution will not happen, but there is a lot of work to be done by incumbent players.
While there's a lot of work to be done by incumbents to ensure that they don't get disrupted and are not, in fact, out of business, let's talk about the opportunities for people in this audience. When we talk about fintechs, and the story perhaps in the last 5 years has moved from fintechs versus banks to fintechs co-opting with banks or fintechs collaborating and cooperating with banks. How do you see this coexistence? Is it likely to be a happy coexistence in the future?
I think there are several layers or overlays of coexistence. Actually, it starts with the India stack. The governor yesterday talked about it, so and everyone here knows what it is. So the India stack is the centerpiece of this whole, I would say, alliance for good, the digital good of this country. And we build on that. And this is very interesting because that stack is enabled by, I would say, a public-private partnership, predominantly public. Government provides the rails, as it were, for that partnership. And nowhere else in the world I know of that it is really a government-driven good. So I think this is on a solid foundation in India. Thereafter comes the other constituents, players, whether it is incumbents or new startups who are getting into this area, who will be enabled by the new technology players. You know, other day I think I made a statement that you can virtually replace the technology in a bank with the technology on a SaaS model that some of the players and some of the names I see here have already implemented. And I can vouch works. So we have reached that stage, and so if an incumbent doesn't see what is about to happen, I think it's not going to be happy days.
If you were still running a bank today, Mr. Kamath, would you be writing out checks to people in this audience? Do you believe that that is what we're likely to see more of now, banks going out there and buying fintechs?
Banks have no options. I had a guest from abroad the other day, one of the largest global banks. When I mentioned to him what is possible, the only thing the rest of the conversation was make sure that, telling his local person, make sure that I have the names of those companies who provide this sort of a disruption. So I think this ability of people in this fintech function to disrupt and collaborate is enormous. So yes, from the India end, the stack that is already there, enabling digitization of existing players, I think is going to be there as a huge disruptor. And I will, for a moment, talk of the global opportunity, because this stack, from what I have seen, and I've seen banking sectors all through, from the time we started off in 1997 to today. What has happened? How evolved are these? In most countries, it is not evolved. So that's also an opportunity. So Digital India, in the fintech world in particular, has an opportunity to scale what they have done across India and globally. So they should look at that as the big opportunity.
So the global opportunity and the global aspiration, you believe that that is going to be a viable option for Indian fintech founders to consider focusing on at this point in time? Or do you believe that that is something that maybe a few years down the line, once they consolidate their position here in India, is when they should start looking out?
If we were having this chat, say, a year and a half, 2 years back, when I had really not started looking at what is available, and I knew what things were happening, and today, when I know that things are available, I would say the time is now. What the startups probably need to really look at is how do you partner with the global players who need you, and how do you provide that value add to that marketplace while you are doing it for India in any case.
You know, Mr. Kamath, you just spoke about value add, and this is the conversation that I want to have with you. So far, at least as far as the banking and financial services sector was concerned, one of the big differentiators or one of the big moats was the regulatory moat. If that is going to be less and less of a consideration, what do you believe will need to be the moats that people will build around themselves?
I see, you're right, Shereen, and I would look at it this way. If regulation was a barrier, then we would not have today. This is what is happening here would not have happened. And we would not have heard from the governor what he said yesterday. He believes, and the Reserve Bank clearly believes in co-creation, because most of these initiatives that have been taken, starting with NPCI, is a co-creation effort. And from there, allowing things to flow in a very even manner, in a manner which is not going to have risk built layer on layer, but in a manner that risk is understood and then you roll out what was called the sandbox approach, I think is what's going to drive business. And they will, from what I could see, continue to be partners, and in a measured way allow a greater entry of other players into the actual financial system, as it were.
When you say the actual financial system, do you mean the banking system?
Yeah, that's right. That's exactly what I mean, whether it's the NBFC or the banking system, to actually allow them to be participants. Today, they are enablers. I think the day is not far when they will be participants. It's a question of regulatory trust, because ultimately the regulator looks after and ensures that the deposits that are taken by the institution are secure. That's the primary responsibility the regulator always articulates. So once that is established, I think it would be that's when the opening would happen. But before that, On the technology side, it is already established.
You know, the technology side, as you said, is established, but let's talk about the road ahead as far as fintechs are concerned. And while there is a great opportunity, there is headroom for significant growth at this point in time, the question also is on the monetization ability and the monetization opportunity that presents itself for fintechs. In your view of fit hai, free hai, which is what you believe to be the case. What are the imperatives for fintechs as they look at their own, financial muscle and their own financial strength?
See, I want to, maybe the audience doesn't know the fit hai and free hai. See, what all the entrepreneurs here have done is clearly proven that the technology they have is, if you had to ask fit hai kya, the answer is absolutely, resolutely, yes, fit hai. So they have proven it. And benchmarking with technology that was available over the last 20, 25 years, stalwarts have built it and so on. But the technology that has been built here is fit. And free hai is a way of speaking. Free hai doesn't mean that it is at zero cost. Everybody has to make adequate profit, reasonable profit. You can set your degree of reasonableness yourself, but you have to make it profit. But compared to what you are used to pay, this is virtually free. That's what I mean, free hai kya, compared to what you are paying. So I would think that everyone is today building that sort of platform, and that will be what will attract a user to it, whether it's a bank or you become a bank and you progress. And this is happening in a world where I say there are 4 Ds at play. So it is demographic. And demographic is not our old definition of demographic. Demographic, what I mean is the great leveler where a young person of 20 and a person not so old of 70 use technology almost as facilely. Not exactly as facilely, but almost as facilely. Then you have got technology which is demonetized. You, in a way, used the phrase monetized. Demonetized. By demonetization, I mean you go at the other end and see things which are today take an Airbnb or a Uber or this. To me, it's a demonetized thing. And at every end, when you look at these, this is where the new technology is used. Dematerialized. You don't need to look beyond the device in your pocket, which now does 10, 20 things which otherwise you were doing physically. And there are several more Ds I can add, disruptive, digital, and so on. But this is the universe that this universe plays in. The reason I talked about this is that every year the touch point is digital. In all these 4 Ds or 5 Ds that I talked about, everywhere touch point is digital. And that's what is going to drive India and indeed the globe as we go along. And yes, you serve India and you have a larger opportunity for serving the globe.
That point you made. And since we're talking about serving the globe and we're talking about learning from experiences outside of India as well, I want to get you to sort of talk to us about your experience in China, because that has been an economy that has seen the digitization wave, again, make the kind of leapfrog that we anticipate India will make as well. I want to understand from you the changes that brought about for the economy, the opportunities it opened up, and what could potentially be lessons here for us.
Yeah, again, I think there are vast differences in what has happened there and what has happened here. Yes, they went into payments very early on. WeChat and Alipay went into payments very early on. But the rest of it is very interesting. If I were to actually look at a Chinese bank, it's far less digital than an Indian bank. An Indian bank. But there are technology enablers who are 5 years back or 4 years back when I lived there, probably were at a higher level than in India. But in 4 years, I can say this without any hesitation, there is virtually no area where we are behind today. And that is, to me, the biggest driving force for us. And who has made it possible? This group of entrepreneurs here has made it possible. And within this, if I were to just pick 1 or 2 areas, it becomes very clear. Take, for example, the data. I still struggle to believe that we use the largest quantity of data and at the lowest price point.
Yes.
So there itself is a story. Data elsewhere, capacity was set up at a price point which was much higher, So the costs are higher to the end user. But we have in the last 3-4 years been able to roll out data at a price point never ever seen anywhere.
Yeah.
And as a consequence, the user, the lay user can use it at that price point. And that makes it pervade and touch everybody that is around us, whether he is a literate or an illiterate today, uses data as almost as well. So I think these differences to me will stand in our good. And just to digress for a moment, almost all areas where we used to bemoan that we are late to the party, we now say that it's good that we were late to the party because we are drawing or reaping the benefits of a price point which is much lower. Data is an example. So data to me has been a big opener in terms of what has been done.
Oh, absolutely. I think I completely agree with you there on not just the consumption that we're seeing, the consumption boom that we're seeing on account of easy access to data, but also, as you pointed out, the lowest cost of data. Not good news as far as telecom companies are concerned who complain about the average revenue per user, but that's a matter for another.
But they're still making good profit. Anybody well done is making profit.
They'll argue about that, but that's matter for another conversation, Mr. Kamath. But you talked about, for instance, the kind of disruptions that we've seen. You talked about the broking business as one of them. Given the various opportunities that we've seen fintechs address at this point in time, what are the unaddressed gaps? What are the white spaces that you still believe that people should focus on?
See, the white space is scaling up. Because I can't see any area where they are not in. And I will sketch some of those which I did not believe people had already got a product, but I am very heartened when I see that the product exists. So the white space is now the great, I don't know, 3.75 trillion economy. You take it to 25 trillion. So that gives you enough white space to grow, thrive, and survive. So I don't see any white spaces at all. Lack of white space or growth opportunities at all.
But given the advantage that we enjoy in the specific areas where we've already started to make headway, what do you believe can be done or what should be prioritized at this point in time?
Yeah, priority is very simple. I think if you talk fintech, there, as I said, you go up the value chain from broking to asset management to insurance to financial services, whether bank or NBFCs. Look at what is possible in the fintech world and provide. See, today you can, I was just looking at how does one look at, let us say, mortgage financing today compared to what we did 20 years back. Today it's virtually can be a faceless experience. It can be entirely digitally driven, including all your document verification and document certificate. Who has made it possible? No bank has made it possible. People here have made it possible. So virtually there is nothing that they have not worked on. The opportunity now is to scale it and to look for the next big thing that they think is...
What do you believe the next big thing is likely to be, Mr. Kamath? I mean, what would you place your bets on today?
My bet is very simple, scale. So I don't want to say, because I can't see anything that they have not done. Everything that you can think of is in place.
Okay. Everything is in place. I am going to take a few questions if you do have them. So do keep your questions ready. In another minute or so, I will give you an opportunity to raise your hands and then and put the question across to you. Mr. Kamath, I want to talk to you about a number. I'm going to be speaking with Kunal Shah, one of the founders in the fintech space, in a second. And this is an interesting statistic that he threw up. Where he talks about the fact that there are 180 companies in India who make more than 1,000 crore rupees in profit after tax. Approximately 28%, that's 180 companies, are in the BFSI space. Given the opportunities that you believe this sector can enjoy, what could that number potentially look like?
100,000.
100,000?
I'm not kidding. There are 100,000 startups today in the digitech space, not just fintech space. I think everybody has the potential to grow to this size because if you look at the value added that they have, I think it's a question of pacing because at times, whatever I have seen and gone deep into that has been created, there's enormous value. So I call it platform value. The platform that has been created, for lack of a word, I'm using platform in a very wide sense, is enormous. But somehow some of the funding partners have set unrealistic valuation part. So if you can navigate this slightly wobbly ground between the enormous value created in the platform and the expectation on, then you, I think, will not have any problems.
Okay. You talked about valuation, Mr. Kamath, and I think this would be instructive for people in this room as well, because there's been perhaps an unhealthy obsession with valuation, with this need to churn out unicorn week after week, day after day, second after second. What is the advice that you would leave here with this audience as they go about building a business, not just extracting valuation?
Yeah, I think, again, I say that you have built a great business. I endorse that platform value is enormous. You now need to look at how to make that platform profitable and then scale it with profitability as a key core component of what you want to do. And value will emerge. But if you reverse it and look at value first or valuation first, then you will have a problem. So you have created value in your business, the valuation has to follow.
You're a believer in the story, but are you a believer in the profitable growth of this story?
I always believe in profitable growth. There is no growth without profitability, because it will be short-lived. And I don't want anyone here to fall consequent to that approach. So without profitability, there is no growth.
That is something that everyone must focus on. Yeah. But at this point in time, and I think many are grappling with this dilemma, there has been money. The VCs have put in and pumped in a fair amount of money at this point in time, and that perhaps is going to start to taper, or at least has started to taper. In that situation, the argument is that, look, we needed this money to be able to build out this market, to be able to change behaviors. Profit will happen, it will happen in time. How do you react or respond to that argument?
So I will say that you needed money initially, certainly, to build a platform, again, the widest sense, the business that you have built. And you've done a great job of it. At some point in time, you need to take stock. What next? What is my path to create profit, which will create the valuation that I want? So like any good business, I think we have grown so rapidly, all of the collective set of companies here, that we need to sit down and find out where do we go from here in terms of creating that valuation, not saying that this is our valuation and please give us that valuation.
It's not as easy as turning a switch on and off, but that there will be distance to cover for many in this room as well. But you talked about the global aspiration, and that is something that you want to leave this audience with, is not just to think India, but to think outside of India as well. I want to ask you about the big breakout moment for UPI and what that could potentially mean for people in this room as well.
I think the breakout moment for UPI has already happened. That breakout moment is acceptance of UPI within India as
the global breakout I'm talking about.
I'm coming to that. Yeah. So because without this happening, that would not have happened. So that has happened, it is proven. It is now only a question of scale. We heard numbers yesterday, 10 billion a month to 100 billion is a revised target. I think it will happen. I am 100% sure that will happen. What I'm saying is at that point, as we grow from 10 billion a month to 100 billion a month, this will become an imperative. Now you have anybody coming from anywhere in the world looking at India, and they actually are amazed at, particularly the Western world. So I think the opportunity is already there. It is now for us to drive. So how could we drive? We could drive it in several ways. Players who have the experience, expertise in this could become partners to global financial institutions, work with global regulators to roll out equivalent products in those domains. And it can happen because it's probably all the 200 and odd countries around the world, this is a product that will find favor. And the only other competing product is probably there in 1 or 2 countries. So your opportunity is global, and the time is now. And I would think that the venture partners who are funded could do well if they were to fund that single, and that would provide a big wave of Indian companies going abroad and actually making a profit. Because in those markets, you would not have to undercut like you are here. In that fit hai kya, you 100% are fit. Free hai kya, you will probably be, probably not as free as you are in India. You will probably get higher return.
that is a possibility, but the time is now to start thinking about going global. That's the other big message that's coming in from Mr. Kamath. We talked about the breakout moment for the UPI, and I also want to address the issue of the CBDC with you, because the governor here held out a large, audacious target as far as the CBDC is concerned as well. What could that potentially mean also as an opportunity, you know, for the fintech community that we're addressing today?
Again, I think we need to look at certain things happening globally to put in context CBDC and indeed UPI. And that is the events of the last 2 years. I think create opportunities which you never thought were possible. So basically, we are getting to a situation where you need to think about the settlement currency and how settlement happens. Domestically, UPI settles in rupee. So we need to look at how will settlement happen with a digital currency in India, central bank currency. And I'm sure that same currency, the next step is going to be settling globally using that same currency. And that would be much more elegant than using the way we settle today in a cross-border way. So that would drive, again, this global reach that Indian companies will have as we go along.
Mr. Kamath, I believe that we're out of time, so let me end by asking you, if you were to be working in a bank today, would you be nervous?
Oh.
Would you be optimistic or feel confident? Or would you want to do something completely different outside of banking?
If I could not change the mindset of my people, I would be a nervous wreck, because there would be no future. So starting with myself, my entire team has to be aligned that change is imperative. I cannot go about saying that, oh, this app of mine, it'll take 18 months for me to redo. And people sitting here will say that I can do it in probably 18 days. So that's the sort of difference we are seeing. So I would be trembling. So I would still continue to work and hope that I can change the mindset of my organization. But as Chris Gopalakrishnan was saying, things are changing on a daily basis. Yeah. And if I think that things will change for me once in 3 or 5 years, I am dead.
Yes, as the president of the Olympic Committee told me, change or be changed. Yes. That really is the dilemma facing many across different sectors and different industries today. My final question to you, Mr. Kamath, and this is something that that perhaps people will want to hear from you. What does it take to build an enduring institution that lasts the many ups and down cycles that the economy goes through, that stands the test of time? What would you put down as the top 3 or the top 5 things that they must focus on?
Only top 1. Top 1 is you need to be, particularly in today's universe, and we have seen it even earlier, but today particular, you have to be a continuously learning organization, and an organization which is able to adapt and change on a daily basis. What you said, change is the only constant. We used to say it in some other way earlier, but to me these would be the 2 things. Rest of it will follow. So you basically need to learn on a daily basis, reinvent yourself and change.
Continue to be a learning organization. That's the big takeaway, and that's the big message here from KV Kamath. Ladies and gentlemen, a big round of applause for the man, the legend, who has shaped India's financial sector in so many ways. And I think, take away the message that he sent out. Think beyond India, think global. Think, of course, about building profitable, sustainable businesses. And more importantly, the time is now. Act today. Don't wait for all the pieces of the puzzle to fall into place. This is the opportunity, and make the most of it. Mr. Kamath, many thanks for joining us here this morning. Appreciate your time. Thank you very much.
Ladies and gentlemen, Mr. Kamath and Ms. Bhan, thank you so much for navigating the conversation with so much ease. I'd request you to stay back, as we'd like to present you both with a token of appreciation from our partners, Perfios. Ladies and gentlemen, can we give a huge round of applause for this engaging conversation? I know we didn't want the conversation to end, but we have to get to our next panel member. Thank you so much.